Hello, friends. Welcome to our weekly podcast. This week with us, we have Mr. Jigar Trivedi, who is a manager of fundamental analysis for non agro commodity section. Hi, Jigar. I hope you're doing well. Can you explain to our audience what exactly is commodity trading?
Hi Karthik. Yeah, man, I'm good. I hope you're also very good. See, if you ask me what is commodity, Karthik, a technical language, if I tell you first of all, a commodity is a group of assets or goods that are important in everyday life, such as food, energy, metals, be it precious metals or base metals. In other words, if I tell you a commodity is any raw material or primary agricultural product that can be bought or sold, whether wheat, gold, or crude oil, among many others. And when you engage in commodity trading, such as all these precious metals or base metals or agricultural commodities, one can diversify the portfolio. So this is just one of the fundamental benefit of investing in commodities. So it brings us to next question: what type of commodities are there? So Karthik, major there are two types: soft commodities and hard commodities. Hard commodities, something which is mined and extracted, is called hard commodity. Precious metals like gold and silver, energy products like crude oil, natural gas, base metals like copper, nickel, zinc, aluminium, steel, lead. So these are all hard commodities. And the other one is soft commodity. Agricultural commodities fall under the category of a soft commodities. Cotton, chana, guar, soybean, jeera, dhania, turmeric, cardamom, refined oil, castor oil, CPO, crude palm oil, mustard oil, wheat, sugar. So these are all agricultural commodities, also called soft commodities. And honestly, I tell you, Karthik, these are all self-explanatory commodities, man. Since birth, it has always been around us. I mean, look at yourself. You must be wearing either a cotton shirt or something like that. You must have had breakfast and you must have had soya bean salad. You must have had mustard oil, crude palm oil, castor oil, soya oil, chana, guar. ये सब्जी भी हम खा लेते हैं. And I don't think I need to explain all these things. Gold ring, look at your mother, wife, sister, daughter. They must be wearing gold jewelry, silver. So I don't think I need to explain that also. Construction, wherever we are sitting right now, or the computer, laptop, or I would say printer, mobiles, all these things that we are using, these circuits are made of copper. Even the electricity within the house, in the house, copper, steel, aluminium, nickel, zinc. So all these are base metals, and we all use it. We all live with all these commodities. So honestly, Karthik, I don't need I need to explain the commodities in detail.
So, where can one individual trade in commodity?
So in India, if we talk about exchanges where one can go and trade in all these commodities, MCX, Multi Commodity Exchange, it's a market leader for non-agro commodities, and NCDX, National Commodities and Derivatives Exchange. So it's a market leader for agro commodities. Very recently, NSE and BSE, they have also launched commodity contracts, and I think with the introduction of NSE and BSE, commodity contracts on NSE and BSE, now people have more options. But the market leader is Multi Commodity Exchange, MCX, clearly.
So, Jigar, can you give us a broad market outlook of commodity segment?
Yes, the most important question, the outlook for short term, I would say next week. And Karthik, I will restrict myself to gold. This week we have seen very muted movement in gold, MCX gold particularly. If you can recall, last week spot prices declined by around 6% as dollar index appreciated by 2% due to US Fed's surprised hawkish move. The US Fed at the latest monetary policy kept rates unchanged but brought forward its forecast for rate hike from an earlier projection of a rate hike in 2024 to at least two rate hikes by the end of 2023. So this move came as core PCE, Fed's main inflation gauge, rose to 3.13 in May, which is the highest since 1992, and employment generation has been quite uneven. In fact, if we pay very close attention to the dot chart signaled rising probability for a rate hike in 2022 also, Karthik. In March, the dot chart, if you look at the dot chart of March, only 4 out of 18 participants forecasted rate hike in 22. That number has gone up to 7 during current monetary policy meet. So the chances are quite high. Although the Federal Reserve has said that they are going to increase the interest rates in 2023, it is very much likely that Fed may increase the interest rates in 2022 also, which also means Fed is going to start tapering the stimulus program. That's why we have seen the dollar rising by almost 2% last week, and the prices of gold and silver have fallen very sharply this week. That's why we have seen a muted momentum in gold. Prices have stabilized around 47,000 per 10 gram. And this week, Fed Chair Jerome Powell, at testimony to Congress, reiterated no rush for quick rate hike. So this is quite contradictory, my friend. So that's why now traders need a clear direction. US will release the core PCE price index for May. So today in the evening. So I think that data will be really very much important for the market. And going ahead, we expect gold prices to increase since the dollar index has weakened this week. And going ahead, the outlook for gold is positive, and we also believe 47,500, 47,800 is quite achievable on the MCX for August contract per 10 gram. And if I talk about the spot gold, around $1795 per ounce is first resistance for next week. If prices manage to close about $1795 an ounce next week, we may see a rally beyond $1800. That's a psychological resistance. And next week we will also closely monitor economic data from US like ADP employment change and non-farm payroll numbers, which will come on next Friday. So all this data is going to be very much important, will play a crucial role, but the sentiment and the tone is positive since dollar index has fallen. The main reason why dollar index has fallen is the economic data which has come from US in terms of weekly jobless claims. It came on Thursday and the data has come on a higher side. It has disappointed the street and the dollar has weakened. That's why we expect gold to rally during the next week also. And as I said, 47,800 levels are also possible. On the lower side, support is 46,600, 46,500 for next week. That's it. That's all from my side. Thank you, Karthik.
Thank you, Jigar. So, friends, that's it for this week. Don't forget to tune in next week for yet another podcast. Thank you.